All right, guys. So I know this looks pretty complicated to everyone. So first things first, how I start my day. What I did at the very start of all of this was I actually added, so I'm sure you've all got TradingView, yes? So what I've done is I went into TradingView and I added each coin one by one into my watch list. So I did that so that I could have every coin that was on Binance Futures on my watch list, so I knew that I could chart any coin there and then. Now, from there, what I do most days is I've got my red coins that I like to chart. They're my favorites.
Nick, do you also just want to show people how to add them if they might not know how to?
Yeah, sure. So guys, so when you want to add a coin, you go into watch list. So you press the plus button there. And then say I'm looking for, BTC, USDT. You want to look for perpetual futures because perpetual futures on Binance. So you click that coin and that coin is added to your watch list. So then when it's into your watch list, it's actually added here. And then you can actually go through every single coin. You can sort it through symbol, you can sort it through flag, you can sort it through percentage change of the day, you can sort it through the last price.
You can also make folders of coins, just for anyone that doesn't.
You can, you can also make folders. So I've got futures, just one folder. I know a few people have ASX on here as well, and they've got their spot holds, so they would have a folder for those coins as well. For me, I've just got my just my futures because I hold my ASX and my spot holds in another area. So then from there, what I do is I'm going to show you let me just get this up. So before you start charting coins, you should all be well aware of like continuation patterns. I'm going to post this chart in the group. And this is all the continuation patterns or the main continuation patterns that you should be aware of when charting and recognizing coins. So these are the things that I look out for when I'm charting a coin. You've got your double hot, your rising wedge. I'm sure we've all heard of like the inverse head and shoulders, your head and shoulders, your wedges, your triangles. So you have to be able to recognize these patterns. They're not hard to remember. They're all basically the same thing. And you have to be able to recognize them and recognize how to spot them in a chart. Now, when you're first starting, when I start charting, so you've got your list now, and your list should be on like your left-hand side. So when I start the day, I've got my list of coins. When I first started, I changed it all to line. So I changed everything to line. I changed it either to the 4-hour or the day. Sometimes for the day, when we're charting, the day is it's a bit hard when you're doing like long ones. Bitcoin is really good for the day, but the coin is like leaner. You don't have a lot of data. So that's why I usually go to the 4-hour. So I will usually chart off the 4-hour. I'll bring that up. Sorry guys, it's a little bit laggy. Okay, so what I do is I start from the top and I literally just use my down arrow and I try and find continuation patterns on the line chart. So I look at that one, I go through each and every single one and I mark on there or I tag on there what looks like could be a breakout pattern. So you see how this one is starting to form into a wedge. I'd mark on there, I'd tag it, and I move to the next one. This one here, That one's not so. A few of these have been charted from yesterday or the day before. But I work my way through each and every coin. And I tag on here. So you can change the color tag. Let me delete that. You can change the color tag here. So I've got all my favorites in red. As I'm going through the coins, when I see continuation patterns, I'll tag them either like blue, what is it? Like blue, green, orange, purple, aqua, or pink. And I'll know that they're a continuation pattern that I've spotted, and I'll know to come back to that one. So where you know with continuation patterns, the best way to describe it is with trading, it's sort of like a tug of war between the buyers and the sellers. And at one point or another, the buyers or the sellers are one side of the rope, so to speak, is actually going to give way. So with a continuation pattern and the way that the buying and the selling pressure works is you go up, down. So down is the sellers are in power, up the buyers are in power, down the sellers, up the buyers, down the sellers, and soon it gets to like either a wedge. And then when it gets to that wedge, it breaks out either way. Now this wedge, and you'll find when you look at the continuation pattern that I post up, it can either go like this, break up or break down, or it can go downwards as well, right? So it is pretty much, so with continuation patterns, all it is pressure between the buyers and the sellers, and one of them wins that tug of war. So what I do is I go through each and every one of these coins. At the start of the day, I actually just go through 1, 2, and this is what I do. Like, I don't recommend all of you start with all of the coins. The main ones that I really like, you know, when you're first starting, learn how to trade Bitcoin, Ethereum, Ripple, Rune. Rune's like our favorite as well. Cardano and like Waves as well. But you can find that your favorite coins, you'll be able to chart easily over the years because you know how they work. So the reason that we all know that Rune works really well is because Rune recovers from a dip really quickly. So that's why all of us love Rune. Now, after I've done that, I've gone through every coin. I then go back to the ones that I've tagged and I chart them up. So I change it back to a candles. Something like that. There you go. So then I go back to candles, okay? And then what I do is I chart. So let's do one. Let's do.
Nick, how long were you trading when you started doing this? Did you start doing this straight away?
So I've been trading spot when I was at high school, I did analytics and trading in high school. I used to trade ASX, and I used to recognize charts.
Mm-hmm.
I didn't really that was back then. I've been trading futures from the start of this year. Honestly, it's really simple to get through. It's not a difficult task. What you have to realize is everything has a pattern. So 66% of the market is made up of bots or computers. If you can take away your human emotion and you can take away what you think is going to happen to a coin, then you will be successful in trading, because no one cares what you're actually thinking or what you're hoping is going to happen. Because when the majority of the traders are actually computers, they all run things through in analytics. So the way that you've got to think, like when you want to be successful in trading, you've got to think like a computer. You've literally got to go, okay, what's going to happen? Where are the trades going to happen? What will the computer do? So when I start with a trade, when I pick a coin that's going to be working well, I have it up here. I have it on the 4 hour. And then I always draw my trends. So I usually recommend you start with horizontal trend lines. And these are trend lines of support. So what we do is when you have support and resistance lines, they usually recur over and over again. And this is because the computers or the bots, they actually pick these up as points where there's been price reversal, there's been strong selling power or strong buying power. So the computers themselves put their buys and sells at these points. So that's why there's always points in the market where you find, okay, why at this point is there resistance or why at this point is there support? So the way that I chart, I start with some vertical lines. So we've got a vertical line, a horizontal line of support along here. We got a horizontal line of support along here. We got touches, 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 touches. Now we got touches and we got some touches here. Now, the one thing that everyone has to remember, everyone goes crazy about, oh, it's not touching specific. These lines of support, and even on your trend lines, they don't have to be pinpoint accuracy. They're areas of interest, okay? So it's not necessarily this price right here. What it is, it's this area of interest, okay? So it's areas of interest that we have to be aware of when we're trading. So once I've done my horizontal support lines, I then go into my whoopsies.
And Nick, Sam just asked, do you clear your charting every day and start from scratch, or keep trends, support, resistance lines, all of that?
With Ethereum and Bitcoin and Ripple, I keep those trend lines and support lines there because they're the main ones, especially with Ethereum and Bitcoin, because those are the, well, mainly Bitcoin. Bitcoin's the one that dictates the market. So I want to know what's happening with Bitcoin, where possible support and resistance lines could be, so that I don't have to rechart that every single day, because I want to have Bitcoin charted so that I know, okay, does it look like Bitcoin's going to go up, or does it look like Bitcoin's going to go down?
Do you normally like on a higher time frame, like a daily time frame? Because that's what I do. If I'm on the daily time frame, I'll mark up like trend lines and stuff and keep those always there as just like a guideline.
Yeah, on Bitcoin, I do. On Bitcoin, it's always on the 4 hour or the 1 day. So I should have said that earlier. On Bitcoin, I'll go back here. So on Bitcoin, these are my strong daily support and resistance lines that I found. So I usually keep my Bitcoin lines all there because I'll show you. And I've posted this chart in the chats a few times. So these lines I drew about 2 or 3 days ago, and you can sort of see how they're actually, it's sort of following. So it's hit that point, it's jumped up to this point, it's gone down to here, and it's had resistance at this resistance line there. Now these lines were done from days ago, so that I keep this up here so that I know, okay, where could Bitcoin be finding resistance and where could Bitcoin be finding support? Because in the end of the day, Bitcoin is God. Bitcoin will tell you what's happening with everything else, and it's the one that's going to choose, okay, are we going to be going up or are we going to be going down for the day? So where we are, I think we're at Matic. Okay. So then, were we at Matic or? We're at Matic.
Do whatever you
it was on ETH.
Oh.
Yeah, we're at Matic.
On ETH.
That's right.
Just someone
It
said
was
ETH.
on ETH, brother.
On?
It was on ETH.
Was
At
it
least
on?
someone's paying attention.
There
I
we go.
wasn't.
There we go. There we go.
Let's go.
I've tried so many coins today. Okay, so once you've got your horizontal support and resistance lines, you then draw your trend lines. Now remember, with your trend lines, it's the top, and you try and get as many touches. Now these touches can be candle touches or they can be wick touches. I generally try to get candle touches and then move from there. So with Ethereum, I'll do that. So you're trying to get as many touches as you can. Now, remember, with your charts, don't be scared about adding too many lines. The more lines that you have, the more support and the more resistance that you're drawing out. Because then you can actually sort of figure out what the coin is doing, where the coin is moving, and you can get those like trigger points. So I'll draw there. You've then got another support and resistance line up here because you've got a channel that could be working. Okay. So then when I've got the coins that could be working, I then go back down to the 1 hour. And then on my 1 hour, I just neaten up the coins. I neaten up the charts, I neaten up the coins. So make sure that it's all touching. You got your tops to your tops, your bottoms to your bottoms. Okay. Now, there's issues like this. So I'll show you. See this here? This is sometimes called a fake out. So it's when it looks like it's broken resistance, but it's actually come straight back down. In that situation there, you would actually, I personally ignore that when I'm drawing my trend line because it's a fake out. So it hasn't broken support. It hasn't created a new area of support. All it's done is just done a fake out. So it could have been a big buy and then a big sell at that situation there. So I try and still draw my trend lines to get the most touches on the tops. With the most touches on the bottoms, okay? So then with trading, all you want to do is you want to try and paint a picture of where the chart is actually going to be going, all right? So for here, it's a bit, there's not really any breakouts at the moment, unless anyone's got any coins that look like they could be squeezing. Does anyone have any? If you do, just type in the chat and one can tell me, and I can chart that up quickly. No one? Okay, that's all right.
Link, mate.
Link? Where is it? Okay. Here you go. So with link. All right. So with these. Okay. So once you've got your coin charted up, there's a few things that I like to use because you always want to find areas of support and resistance. So like I said, first things first, you go through your coins, you look for continuation patterns and you draw your horizontal support lines and then your vertical support lines. From there, I like to use something called a fib fan. Now, everyone knows like your Fibonacci retracement is your retracement levels. And that's when the computers know to rebuy back in. And that's at your 0.618, your 0.5, your 0.382, the main levels. What I've found is that when I use a fib fan, so a fib fan, where is it? A fib fan actually gives you trends, trend zones. So when you're drawing your fib fan, you're going from a low point to a high point. So I will draw my fib fan here. And you can adjust your fib fan accordingly to try and make it fit your areas or your zones. So this is the way that I do it. So with your fib fan, these are all just areas of distance, right? So just like with your trend lines, you want to try and make them fit. It doesn't have to be perfect, but the bots and the computers know that, okay, when it's moved by a retracement of a certain percentage, it will rebuy at this percentage. So that's why I sometimes move mine along to make it fit and to make it look like it's working. So with this one here, I would move it one up or down. Okay. So I do my trend lines. I then add my fib fan. And then from there, I mark in points of areas of resistance and support. So for length, we've got an area of support that is down here. We've got an area of support that support and resistance that is here. And we've also got a channel that is here. When you're entering a trade, you never want to enter a trade that is between these areas, okay? You want to enter a trade that is of areas of interest. So that is why I only ever enter trades that are here. I only enter trades that are going to be breaking, or trades that may or may not be hitting areas of your resistance on your fib fan. Okay. So when you've marked up those areas, okay. So when you've marked up those areas and you've got your areas of support, your areas of resistance, your fib fan, and you can even use Fibonacci retracement if you're looking for a retracement zone. So your Fibonacci retracement zone is quite easy as well. Sometimes if they look like they're lining up, then you can use that as an area of entry as well. So with your fib retracement is from the low point of the run to the high point of the run. Some people, they go from, they might go from here because they find that this is one run in itself. But if you're looking for the total run itself, you can go from the low point to the high point of the run. Oops, to that high point there. And like I said before, computers mainly buy at the 0.618 level because that's what they're programmed to do. So then we mark that on our computer as the 0.618 level. So they usually buy around at about 0.618 level. So I usually mark that. And if I've marked that and that area there coincides with a support line and it also coincides with a fib retracement line, then for me, that area there is an area of interest. So that, I square that up. I delete these because you don't need these there for the whole time, but I square this up and I look at that for an area of interest. Now, as the coin or the as the prices are entering this area, what I use for confirmation when I want to enter a trade is I've got something and I call it you probably see me enter this in the trades chat. So this is called the Fu Manchu Cypher B. Okay, that's what I use for entering a trade, and I enter that in a long or a. Where's that come on? I use that for entering a long and a short position. Now, the way that you use this cipher is really good in finding out divergence in a market. So what I do is if I've got a trade that's here, I put it back to the 4 hours, okay? Because you always want to look, when you're trading on a 1 hour or 15-minute time frame, it's a much smaller time frame. You want to actually look at the macro. When you're entering trade, you want to look at the actual macro trend of the trade, so the overall big picture of the trade. And you also want to look at the micro as well when you're entering. So if overall on the 4 hourly, the trend line is going down, you wouldn't want to be setting a long position and just leaving it for a couple of hours. So that's why I always look at the 4 hourly. So
Nick, sorry, Mike just said, is the width of that zone the space between 0.5 and 618?
This one here? Yeah. So I mark it between 0.5 and 0.618 as my entry zone because it's anywhere in between there. So like I said before, guys, with your entry zones, it's not a specific price, but it's an area of interest. So in a bullish market, you'll find that it bounces off the 0.5 or 0.618 quite easily. But in a bearish market, it might run straight through there. So that's why I highlight that whole zone so that when the price enters that zone, you can start to have a look at what's actually happening with the coin during that price. And then once you have that zone, so for example, right here, Chainlinks has entered this. Usually, you know, most people go, okay, that's a support zone. It's going to bounce back off. But you need confirmation because you want to make sure that there is actually going to be money coming back into the coin for it to bounce back up. So, because what happens with, like I said, with continuation patterns, you've got sellers in control, buyers in control, sellers, buyers, sellers, buyers, sellers, buyers, and then it bounces off. But if there's no buying power here, we could quite easily break, retest, and head back down. So that's where I use my indicators and my confluence, because you want to make sure that before you enter a trade, you're certain that your trend lines are actually supported by money flow, by your indicators. The ones that I use are your is my Fu Manchu Cypher B. I found that one has been, since I started using this one, my trades have actually been pretty spot on, because it gives me 5 points of reference before I actually enter a trade. Now, before you enter a trade, so understanding Fu Manchu, I'll bring it across. Okay, so if you look for, okay, so I bring it to the 4 hour. Okay, so with the Fu Manchu, you've got your so this wave here. So we've got the money flow wave, and it's an oscillating indicator. So it shows the actual direction of the market. So with this one, I'm sure Bjorn's going to go into it a bit more detail because he knows it quite well. The way that I work Fu Manchu is that you've got a few indicators here. So you've got your green dots. Your green dots are your buy signals, and you've got your money flow wave. So your money flow wave is red, all right, and green. So when your money flow is coming out of a coin, it means that it's on a potential downtrend. When your money flow is going into a coin, it means it's on an overall uptrend. So what you're trying to look for, and what this indicator shows, is divergence in the market. Okay, so when your Fu Manchu Cypher is at a low, so that means the market is dipping down. And when it shows a green dot, your green dot there shows that there is a divergence in the market, and that is called your anchor wave here. So your green dot, your low green dot on a low wave is called your anchor wave. So that is your anchor point. So that shows that there could be a change in direction from downwards to upwards. Now, before I enter a market, there's 5 things that I'm trying to look for. I'm trying to look for on the 4 hour time frame, before I enter a long position, I want to look for a big wave at the bottom with a green dot as my anchor wave. And then I want to look for a trigger wave. So a trigger wave is a lower wave up here with another green dot, because that is the direction. If you look, that is the direction of the coin. So the coin is going upwards in an upwards direction, and the actual divergence of the coin, so the money flow and the direction of the coin, is going in an upwards direction. So that's why this low dot here is called a trigger wave. I mean, it's an anchor wave. And then your higher wave, which is smaller, is called your trigger wave. So that's one confirmation. That's 2 confirmations on the 4 hourly. I then always go back to then I go to the 1 hour. Okay. So once I've found my point, and I think we were, where were we? We were over here. Okay. So we were over here. So there we have our anchor wave. Okay. So what you want is your anchor wave. on the 1 hour. And then once you find because you go from your 4 hour, and then you go, because you want your 4 hour is your macro, so your overall coin direction. And then your 1 hour is your micro. So your 1 hour is where the coin is heading within the time frame of the day. So once I've found my anchor wave on the 4 hour, I go to the 1 hour. I see that there's a big green dot. That's a trigger wave. Okay. And then I see that there's another wave here. So I'll bring that up. So you got your big green dot, trigger wave, or anchor wave, sorry. Then you've got another smaller dot. So that's your trigger. So that means, okay, let's pull the trigger and let's enter this for a long. So, but before you do that, you want to make sure there's one more confirmation that I use, and that is called your Wolfpack ID. So before I enter any long, I want to make sure that my Wolfpack ID is above the value of 1. So it's green. So for here, I had my anchor wave, I had my trigger wave, my Wolfpack ID was green, it was above 1. So I actually entered a trade here. And so that's my confirmations that I use. Now, when you're entering a trade, that might be from a continuation pattern. A lot of people ask me where I put my stop loss and where I put my my take profits and my take profits and my stop loss. So when you're organizing, or when you're trying to sort out take profits and stop loss, where I set them is I always set my stop loss below the last lowest point. So for example, if we had, and this is a trade that I entered before. So I had this playing out. Okay. So I had this playing out as a continuation pattern. I entered link at this point here, because what happened was I had my trigger wave, I had my anchor wave, sorry, I then had my trigger wave, and I had my Wolfpack ID above 1 in the green. So for me, that was confirmation that, okay, the coin is heading upwards. Now, when I'm setting my stop loss and my take profit, I put it into my my entry point. And I know a lot of people go, you do your 1 to 3. 1 to 3 doesn't work if your 1% is not below your last low, because it could wick down and then you're automatically stopped out of your trade. So the way that I put it down is I actually put my stop loss a little bit below the last low. Now with altcoins, so that's 3.25% times 20. So you're looking at about 70% loss in your trade. But when you set your take profit, I always set it around the area of where there's a lot of noise, where there's a lot of buying, or where it looks like price has halted for a bit. So I would set that there. So for me, 13. So I made 260% on this trade here. Because that's your risk and reward. It can be 1 to 3, but you also want to make sure you don't get stopped out. Because if you get stopped out in your trades, what's the point of being in a trade? That's why I always put my my stop loss just before the last low, especially if it's in an upwards trend, because with your if a coin's in an upwards trend, it's going to start making higher lows. So you have to assume, or you want to assume that the next low of that coin is not going to be lower than the last low. Because if it is, then it's on a downwards trend. You don't want to be in the trade anyway. So that's how I set up my stop loss and my take profits. Okay. Is there any questions at all on anything? So
I've got a question.
Yeah. Go for it.
Where you put your take profit there, that horizontal line you put in, you said that's where when you're looking at it, you can see there's a lot of market structure there. Yeah. What exactly when you're looking at that is giving you that indication? Because if I was to look at that, I wouldn't have placed it there. So I want to know what you're looking at that I'm not seeing.
Okay, so do you see how there's a support there? I'll zoom in. You've got your support here. You got resistance. This area here was an area of market indecision. So you got your buying and your selling through here. This was an area of resistance, and this was an area of resistance as well. So you know that's where I placed about around there. So that's where you're looking for areas where it looks like the market has halted in moving forward, because computers will actually bots will actually look at where there's been areas where there's been lots of buying and selling power halted, and they'll know, okay, at this point here, there was sort of like a standstill. We will know to buy or sell at this point here. So you want to think like a computer, because computers just use data. So if they know that 40% the price over the past 24 hours or 48 hours, 40% of the trades have occurred in this region here, then they will actually buy or sell in that region as well.
Nick, do you use any moving averages, or just the three indicators, the BMC, the Wolfpack, and divergence indicator?
I used to use moving average. I actually found that these ones worked better for me. Everyone has their own style. When you can scalp, so I know that there's a lot of people that use that. Like I still have my 9, 21, and 200 as well.
You got to find what works for you at the end of the day.
You got to find what works for you. The problem that I find when using these ones and you're using your moving averages is that sometimes, like for example here, I know a lot of people, they will go on they'll do a buy on the cross of the moving average. So when the 9 moving average crosses over the 21 moving average, they'll put a buy call in. And then when it crosses underneath the 21 moving average, they'll put a sell call. So they'll sell. However, there's also a lag component here. So when there's a lag component, I don't like to be in a trade if there's going to be a lag component, because if I'm buying and I'm selling here, if there's a massive dip, it might come down here. My sell could be here. So that's where I have found, I used to use the moving averages, but I've actually found that using my my Cypher B with my Wolfpack has actually worked a lot better. You can also use your divergence indicator as well. So a lot of people, if there's a bear call, they won't enter a market on a bear call. If there's a bull call, they won't enter a short on a bull call. It all depends. Like everyone's got their own ways of trading. I found this is the easiest way for me to read lots of trades and get confirmation real quick. Because all I have to look for when I want to enter a trade is I go into the 4 hour, I look for a green anchor wave, and then I look for a green trigger wave, and then I go into the 1 hour and I look for the green anchor wave, green trigger wave, and I make sure that my Wolfpack average is above 1, and all my data is right here for me to look at. So I don't actually have to try and add MACD or divergence indicators or moving averages. You can use those. I've just found, for me, I've had my most success forgetting about all of this, making sure that my chart is all clean, because if you have all this shit on here, like like if you have all this shit here, like how are you going to look? How can you actually see what the candles are doing? You know, you've got everything everywhere. That's why I like to use indicators, which try and keep my chart as clean as possible, so I can actually see what my chart is actually doing. Because in the end of the day, you want this is your main point of interest right here. And if this is cluttered, it's like having a cluttered workbench. If this is cluttered and you can't see what the coins are doing and what the charts are doing, then it interacts with I found that it interacted and it interfered with my trading. So having this all clear where I could just chart and I could chart quickly, and then I could look at my my Cypher B and my Wolfpack as a confirmation, that works really well. Because these ones here also tell me when not to enter a trade. And that's also that's the smartest thing to know. You have to know when to enter a trade, but you also have to know when not to enter trades and when to sit back and let the market do its thing. I've lost a lot of money trying to catch knives. So that's why now I will sit back and I'll let the charts do themselves, and charts work out what direction they want to go into. Because for me, when a chart is going well and when the market is doing really well, I can make 2000% easily. Like, because I just chart up real quick. I can see on here really quick, like this is all done for me. I can see entry points here really quick, and I can enter a trade, set my stop loss, go on to the next one. And for there, I can actually enter like 10, 12, 15 trades within time span of like 15, 20 minutes. And I can make 1,000, 2,000% in a day or 2 days. And then I can have a day or 2 days off. Because the whole thing is you want to try and preserve your account as much as possible when you're trading. Because if you keep getting stopped out, and you keep losing your account, there's just less money that you can actually make in a trade. So that's the main gist of how I trade on the daily. So like I said, I go through all my coins. You don't have to do all the coins. You can just start off with like your 10 of your favorite coins. Go through each one every day and just have a look. Look for continuation patterns. Even if there's no continuation patterns, chart them up, you know. Look for ones that could be. So, you know, you chart this one up right here. You know, you can chart link. So link doesn't look like it's going to be breaking out anytime soon. But you can chart it up and you can go, okay, it looks like 1, 2, 3, 4, 5, 6, I don't know, 10 candles. So 12 hours. So at 7 o'clock in the next morning, it might have hit this pivot point here. But chart, get comfortable and confident in your charting. And you'll find that the more you chart and the more that you extend your chart as well. So even if you take your chart out to here and you go through to this one and you extend it, you will find that the price follows these support and resistance lines. And when you actually find that your coins that you've charted have followed your support and resistance lines days after you've actually charted them and days after you've drawn them, you actually get confidence in your charting. And you go, you know what? Maybe it's not as hard as I think it is. Maybe it's actually a lot easier because the coin is clearly following a pattern and I got that pattern right the first time. So that's why I try and say, always chart as many coins as you can. Just practice and just practice with your charting. Start with your
Sorry, when you're ready, can you someone asked if you can chart Matic, and then also if you can show them just how to add the Wolfpack ID indicator as well.
Oh yeah, sorry guys. Oh, this looks good. Okay, so when you're adding your functions and your indicators, so Fu Manchu, Cypher B, click the star next to it, okay? Because that puts it into your favorites. So I use Fu Manchu, Cypher B, Wolfpack ID, and divergence indicator. those are the main ones that I use. Okay, so Matic, let's have a look at Matic. Now, when you're charting a coin, having all these indicators here, it takes up too much room, I find. So if you double click your screen, it makes it there, okay? So the way that I would chart Matic, and just so you know, guys, I've got just one single laptop and I have a phone. So I don't have like 10 or 12 screens. I do this all just basically on a on just one laptop. And I enter my trades on my phone. So charting Matic is what I'll do. You go into the 4 hour. I like the 4 hour at the moment, just because I'm not entering this for more than a day or 2 days for Matic. So you want to chart in the time frame that you're going to be trading. If you're going to be trading in a like putting a trade on for 2 or 3 days, then take it to the daily. But if you're only going to be trading it for the next day, like 4, 8, 12, 16 hours, then you only need to be on the 4 hour time frame. So I've got 1, 2, and okay. So I find those are my main 1, 2, 3, and under here. That will be my main lines of support and resistance. Okay. Now, like I said, these don't have to be 100% accurate. They're just areas of interest. Now, from there, you got your trend lines. So I've got, and I always extend my trend lines. So doesn't matter. It doesn't have to stop on the top. Like I put it further just so that I can see that it's hit the top. Now you can either go from the top of the wick, so it hits the top there, or you can go from the candles themselves. Okay, like I said, it's all about areas of interest. It doesn't have to be accurate. It has to just be an area of interest. You don't have to get the exact dollar to the cent where it hit. It's just this area of interest, okay? So then I will go from the low wick here. I'll do one line up there. Looks like it could be there. So I've drawn a second trend line here because, as you can see, this line here was used as support, and then it broke through and it's now using this line as support. It could get stuck in this channel or it could pop through. So the more lines that you draw, the more accurate the actual movement of the coin will be. And then you could go from here. You'll learn to eyeball these as you get better and better. You'll learn to see, okay, where's the most tops, where's the most hits. So there. So I've got hit. This acted as support. This was as resistance. And there we go. So that's my lines on the 4 hour. Then I go down to the 1 hour. And with the 1 hour, you just tidy it up a little bit. So that was clearly a fake out. See, there's one big candle and one big green candle and one big red candle. I call that a fake out because it closed above, but then the next candle closed underneath. Be careful with these ones because they can catch you out as well. If you'd entered that trade and you left it, you would have been stopped out. So here is where I tidy up all my trend lines. So I tidied that one up there. I tidied this one up here. sometimes when you get to the 1 hour as well, you can actually find other trend lines. So I've gone down to the 1 hour because you have to remember the 4 hour time frame is the combination of 4 candles. Okay, so if all these 4 candles equal to a total value of this 1 area, that would just be 1 candle. So that's why sometimes you can see other trend lines when you go down to the 1 hour and you can draw them up. So for me, that there's another trend line. Do you guys see how that's hit the tops? That's hit the tops. There's a bit of an area of resistance here where it's bounced off this area of support. It's bumped up, it stayed above it, and then it's broken through. And then these are the 2 tops here. And then you've got here as well, which is an area of, let's use this area. Let's use this area as support and this area as resistance as well. Okay, so once I've got all my trend lines charted, for me, I will be looking for a breakthrough. So you've got your continuation pattern here. You want to find a point where it could potentially break through up the top, or you could enter it from the bottom if it breaks up. With myself, I always add alerts on this top trend line here in case it breaks up to the top. So you click on the line that you want to see it break through. I'll click on that one there, and I just add an alert and I press create. So I've got the pro version, so I can have quite a few alerts on my phone. I think at the beginning version, you can only have 3 alerts, I think. Honestly, the pro version is so much better because you can have more than 3 functions, and you can also have more than 3 alerts. You can have quite a few alerts as well. Okay, so then the other thing that I would do is when you're charting, you want to try and find as many areas of support and resistance as you can. So then I would actually do a quick fib fan. Now not everyone has to use fib fans. Sometimes they're a bit of a pain because it adds too much lines, but I like them just to see if there's any areas of support or resistance that I should be aware of. So with your fib fans, you want to draw it from the point, from a low point to a point of market reversal. So for me, this is my low point, and then my point of market reversal is up here.
Nick, did you change your settings on your fib fan?
No.
No?
My settings on fib fan, no. My settings of fib fan are just market settings.
Yeah. So
when you draw your fib fan, it sort of makes you realize, okay, maybe all these fibs and all this Fibonacci stuff actually makes sense, because I've drawn my fib fan from the bottom to where I find there to be a market reversal, and you've got channels. So when you actually see it play in person, you think, okay, this is like, look, channel hit there, resistance, resistance, resistance. It stayed in this channel. It stayed in this channel. It stayed here in this channel as well. So then I know now that around here is going to be an area of support and resistance. So if it drops below here and bounces in this channel, it's probably going to drop down. Or if it stays above there, it might bounce up and get squeezed out to the support line. So I just use my fib fan only for extra confirmation, just for extra confirmation on the trends of the coins. You can use your fib fan from the bottom to the top, or you can actually use it from the top to the bottom as well. So if you want to run it from the top to the bottom, you'd run it from the top there, and then I would run it to where I found there to be market reversal, which was probably around about this point here. And you can still see channel, it's hit there, it's bounced off this line here, and it's bounced off here. Fib fans are pretty, unless you're confident in reading all your lines and all your fib fans, I probably wouldn't bother with them just yet, because they can get, like, when you have so many lines on your chart, especially when you're first starting, it sort of gets a bit too much. You want to make things as basic as possible. Now, when I find potential support and resistance lines, I look for potential entries, and I mark those with the green box. So this would be a potential entry here, and my next potential entry will be, if it breaks support, I'd probably be looking for there, because at this point here, it's not only broken the trend line, but it's broken the horizontal support. Now, when the coin gets into these points here, that's when I start looking at my indicators for confirmation of whether to enter or exit a trade. So for here, because some people will be like, okay, should I enter my trade here on the bounce off? Will it bounce up? I always take it to the 4 hour, because you want to see what the coin is going to be doing overall. Now, straight away, you can see on the 4 hour, I wouldn't even think about entering that trade, because you got a big red dot. So your big red dot means that market is in a bullish market, so it's heading down. So I wouldn't even think really about entering this trade until I started seeing some green dots print. Some people, if they want to scalp, they can do it on the 1 hour. But even on the 1 hour, right here, I've got no green dots. I've got no confirmation that, okay, there's going to be a market reversal. Money flow is flowing in. There's no, on my wolf pack, it's not green. It's not above 1. So there is no confirmation for me to actually enter this trade. So as much as you want to think that, okay, it's hit my support, it's hit my resistance lines, I should enter a trade here, you don't want to just enter a trade just based purely off support and resistance lines. You want some more confirmation. You want money flow to be going in. You want the overall trend to be going upwards, because entering just on purely support and resistance lines is sort of just taking like a 50-50 guess. So for this coin, for Matic in particular, I wouldn't enter that trade just yet. I'd follow it. It looks like it could be breaking, because it looks like a really good, it's looking like a good squeeze. I don't like how this point here is above the previous point here. I like to, when I'm looking for a squeeze, I like to look for it shortening and shortening and shortening and shortening. It just gives me a bit more confirmation that the pressure between the buyers and the sellers is becoming more even for a greater pop-off. So for me, with Matic, I'd leave that. I'd keep watching it. It looks like a good coin that could pop, but I would not enter that trade just yet. Just because there's no confirmation for me.
Nick, are you self-taught or did you learn from someone?
I learned all myself, to be honest. I did do, like I said, I did trading analytics back in high school, and I actually used to run I ran an ASX program that could predict the market based on algorithms. So not charting, none of this charting, none of any of this. I actually based it off algorithms. And that's where, that's why I'm confident that most of this is run by computers. So that's sort of where I know to actually just think like a computer, because a lot of coins, a lot of charting, a lot of buying and selling is done purely based on algorithms. And so I did that back in when I was 16 to 18. I was involved in that. And then with the charting side, I taught myself how to chart for the past year. And then when I joined Crypto Kings, I just watched a lot of the videos, and just it brushes up. Honestly, the more videos I learned of other people how to trade, you don't want to just stick to one person. You want to trade your own way, because if you're not confident in the way that you're trading, and the way that you do things, then you're not going to be confident in actually entering a trade. Like for example, I don't know harmonics. I have no idea with harmonics. I don't even try it because I will screw it up 99% of the time. So harmonics is not my thing. I stick to real basic trend lines, fib fans, and Fibonacci regression lines, and also just my my market ciphers. So I'm really basic, and I found that the more basic that you can be, the less time you actually have to overthink your trades. I lost a lot of trades when I was overthinking them because I'll be like, oh, should I enter here? I don't know, I need 10 points of confirmation, and then suddenly 10 points of confirmation is done, but my trade's already up here. I've lost it. So that's where I make sure that I'm really basic. I was practically all self-taught with what I did. And that's why I reckon the best way for you guys to do, go out there, watch the videos, see what works for you, and how you can trade, and how you're comfortable with trading, and sort of create your own way of trading. Like, don't be stuck on me. You don't have to use these ciphers if you don't want to. You don't have to draw your trends. You don't have to use fib fans if you don't want to, if you're not comfortable. But I find the best way that I traded is when I learned, and I've watched a bit from everyone's videos, and I just said, okay, this is how I'm comfortable. This is how I trade. And yeah, that's sort of the way that I went through it. Is there any questions to anyone? You guys can unmute yourself if you want.
Guys, also, if this becomes a regular thing, like, think of some themes that we can do.
Oh yeah, we're thinking of some themes. Like, we're going to do like this is the first Zoom I've done with this many people. I usually do Zooms just one-on-one with a lot of people. So sorry if I'm a bit like sketchy or nervous, or
no, you
it's
did
a bit sporadic.
You did well.
Yeah, it's the first time I've done it. Like I don't know. Everyone thinks they're a really bad trader. Like, I think I'm a horrible trader. So for them to ask me to show what I do, I was like, oh, really? Like, not financial advice. I won't rug pull you.
Hashtag NFA.
NFA.
Nick, can you just go through them the triggers and the anchor points on that cipher, please, mate?
Yeah, of course.
I just wanted to thank you too, mate, for jumping in doing the Zoom. You actually done really well. I actually had a couple of messages, mate, about you, just saying how refreshing it was and how polite, yeah, you've done really well, mate. So
thanks, mate. I appreciate it. All right, guys. So I'll walk you through. Huh?
Yeah.
It's the Solarium tan. Maybe. Crypto bought me a Solarium, by the way.
Oh, that's nice. That's mine. My next purchase as well.
It's always good to have goals.
Mm-hmm.
Okay, so with Market Cypher B, there are two main things. You've got your anchor waves and you've got your trigger waves. So your anchor wave is a really deep wave. Let me bring this up. This is the best way to show you all. So your anchor wave is a really deep wave with a green dot. So usually your deep wave wants to be below 60. So on your, if you look, when I'll show you, it has it here. And you can sort of, like, when you scroll your mouse over, you can sort of see the value as, that's like, negative 95. That's 0 all the way to 200. Oops. Okay, so with Market Cypher, you've got your money flow, and your money flow is red and it's green. So as you can see here, that's green and that is red. That shows where money is moving into or out of the market. All right. So that's one part of it. And then you've also got your anchor waves and your trigger waves. So your anchor waves are waves that show change in direction from a dip to a divergence to a more bullish market. So with your anchor waves, they show a turning point when the coin has hit its bottom and it looks like it's going to be reversing out. Now, if you're entering a position for a couple of days, I would never enter a position where there's a red money flow, because that means that overall money is actually leaving. However, for what we do, most of us trade, one trade, like a trade won't last more than a day or two. When you're entering a trade and its money flow is red, but you've got an anchor wave, so a big deep wave that is below 60, that shows that, okay, money is heading out, but we're going to have a reversal from money flowing out back into money flowing back into a bullish market. So it's also important to know that you don't want to enter just on these big trigger waves. So just because something's printed a trigger wave, so a big trigger wave here, doesn't mean, okay, I'm going to enter straight away. You want your trigger wave plus, that's an anchor wave, sorry. That's your big anchor wave plus a trigger wave. So when you have your big anchor wave, just think about your anchor wave as, okay, that's my anchor, that's my set point to start looking for a long. So you've got your anchor wave. When your anchor wave is set, you start to look for a trigger wave. So a trigger wave is a smaller wave that is diverging up, and it shows that there's a trend in the market from a low point to a high point. Just like when you look at your divergence indicator when it's printing higher lows, when you have your anchor wave and your trigger wave, it's printing a higher low to show that momentum is moving from a low point to a higher low point. So that's where I go, okay, I look for these anchor waves. And when I see these anchor waves, so that's a big anchor wave. That was another big anchor wave. These were also big anchor waves. I look for a smaller trigger wave straight afterwards to show, okay, should I enter the market? If I see that there's a trigger wave afterwards, then I go, all right, it's time to enter the market, because divergence is moving from a large dip to a smaller dip to an even smaller dip, which usually means if you're going from a higher low to a higher low to a higher low, your market is moving upwards. So if we look here and we use this as an example, so we've got our deep anchor wave. So that deep anchor wave was below 60, but you wouldn't enter there because you're not going to enter there because you haven't gotten a second wave yet. Right here was your second wave. So that shows that there's a trend reversal. So at this point here, that's where I go, okay, let's start looking for a long. And that's where I use my wolf pack to confirm that it's a long position. So I've got, okay, long, it's green, so it's above 1, let's enter. And you actually look and go, boom, okay. At that point, exactly right there, if you look at the screen, look at the line, that line right there, it is green. You've got your anchor wave, you've got your trigger wave, and you've got a green on the wolf pack. Like it's pretty much printing to tell you when to enter a trade. If you aren't confident or you actually really want to go, okay, what should I recognize? And this is what I did when I was first trying to figure out the market. I actually went into previous jumps in trends just to see, okay, what printed previously before a massive spike, before a massive uptrend. So I would actually go into the previous history. So for example, this point here, so this was a couple of days ago. You've got your big trigger wave here. Your big anchor wave. Sorry, I keep getting trigger and anchor waves mixed up. You got your big anchor wave here with a big green dot. So it's saying, okay, something is happening in the market. There is going to be a reversal at some point. It's not confirmed yet, but be on the lookout for a long position. You got your second wave here. Your second wave is your trigger wave. And that's when you go, all right, that's your big, all right, let's start looking for a long position. Okay, this wave here, this trigger wave says, all right, I think a long position is about to come away, about to come up. And then suddenly you've got green on your Wolfpack ID, and you go, all right, time to enter the market. So that's when I entered the market there, just before that jump right here. So you've actually got 1, 2, 3 points of confirmation for that entry. Because you don't know, like with it could be fake outs, it could be anything. So that's why this is so easy to read. You've got 2 waves, anchor wave, trigger, yeah?
No, that was my phone. Don't worry, just ignore. I realized I wasn't on mute.
That's right. You've got anchor wave, trigger wave, and you've got confirmation with your green Wolfpack ID above 1. That's when I would enter a trade. There's fake outs as well. So like here, if you'd entered, let's try and find a fake out just to show you guys. All right, here we go. So you would have a wave, you got your second wave, and this one is -62. So that's called, that's still your anchor wave because it's less than -60. Then you've got your trigger wave right here, but it's red. So you wouldn't enter on that dot right there. You wouldn't enter because your Wolfpack ID is red. So when your Wolfpack ID is red, like I said, you do not enter a trade. You can enter afterwards. So if you've got your anchor wave, your trigger wave, you can wait till this goes to green before entering a trade. But I like them all to line up simultaneously because you run the risk of getting a fake out. So sort of like a false positive, so to speak. If these all 3 don't line up, it's like having a false positive. So that's why I like to use 1, 2, and 3 points of confirmation before I enter a trade. Another thing that you can do if you want to just look for entry points, or if you don't really want, you're not confident with your charting in itself, what you can do is you can actually double click on your divergence indicator and you can actually sort through coins based on their Cypher B. So if you're confident, okay, I want to try and find a anchor wave and a trigger wave, you can actually sort through all the coins and look for, all right, is there an anchor wave and a trigger wave? If there is, awesome. Let's chart this coin up and see what's going to happen. So that's another thing that you can do to try and streamline the amount of coins that you get a success rate of. Okay. Was there any questions? Does anyone want me to chart any coins they see popping off? I'll have a look through the chat. Let's have a look.
Someone asked, what about selling instead of a
what about when selling? Oh, what about when selling? Okay. So when you're shorting the market, the exact opposite. So when you're shorting the market, remember everything that I told you. So I'm starting to sound like Kyle, all bullish. So when you're shorting the market, the exact same, but opposite. So you've got your red dots, and your red dots are sell points, and you've got your anchor sell, your trigger sell. So your trigger sell wave is a smaller wave on the upside, plus red in the Wolfpack ID. So remember, when you want to long the market, you want below. So you want waves that sweep upwards. Let me do this. So the best way that I remember this is when I want to long the market, I want waves that sweep up. All right. Plus green, green, and green. So green for go. When you want to short the market, you want waves that sweep down, right? Red, red, and red. So that's my confirmation for longing or shorting the market. Okay. I can't see the chat. Is there any chat? Where's the chat? Okay. Was there any other questions or anyone had anything they want to ask me while I'm here? I'm here all night anyway. I won't be sleeping tonight. I'll be just chatting.
More vodka.
More vodka. No drinking anymore. Well, yeah.
No, you go.
Oh, what I was going to say is, guys, you'll find also there are certain times of day that are most active for trading. I find that during the day, like between 10 and about 5 o'clock during the day Australian time, it's actually nothing really happens that much. Mainly because I go by international trading. So I find that between 10 and 3 a.m. is the best time to trade. I know it's not perfect for everyone, but even at like 5 or 6, 7 in the morning, that's a really good time to trade. That's when I get the most volume and the most volatility, because you've got the most amount of users that are actually trading during those times. You can sort of find that everything, like I said, it's all based on computers. So computers will also know days of the week and times of the day to actually look for trades. So that's why we found that, every Sunday it's a blood market. That's because computers know that every Sunday, if there's a sudden decline in volume or there's a sudden decline in your indicators to show that we should buy, they will sell. So that's why computers are set to actually program date, time, price, and combine that with indicators on when are the best times to sell. So that's why every Sunday seems to be like a blood market, because it's just programmed in the computer, so that's the best time to sell. Okay. Let's have a look at the chat. Looks like, do I use MACD at all? No, not at the moment. I was learning how to use MACD, but to be honest, this is honestly like this Cypher here. Since I've been using this, it's I think I've lost 3 trades and I've won 27. So it's it's pretty good.
Probably probably the best advice is to just even out of the ones that Nick's mentioned tonight, have a sus on like Google and YouTube, because every single indicator works different for I've seen people use different indicators to this again. Like whatever works for you, whatever you feel works best for you, just have a sus. Like you got to educate yourself as well a bit with YouTube and have a look. That's the best way.
Yeah, exactly right. So, like I said, like harmonics is an indicator. I cannot do harmonics for the life of me. I don't know why. Whenever I try to enter a harmonic, it will go the opposite way every single time. I even have a harmonic indicator, and even when I enter it on that, it ruins it for me. I just cannot do harmonics. Everyone is different, and everyone works different. Like, so this is what works for me. I find this the simplest to use, but I know people that use the MACD and the RSI, and they find that works perfectly as well for them. Like they actually can determine the relationship between divergence indicator and MACD and figure out the best time to enter. And then you've got things like your candlestick analysis as well. everyone should know, like, I'll post in the chat candlestick analysis, the candlestick Bible. That's a really good one for everyone to just read. The candlestick Bible is just to know when you're looking at a chart what is kind of happening in the candles, where the buyers are in control and sellers are in control. Can't find those indicators in TradingView. No, you should be able to have it. So
yeah, the VMC, you've got to type the whole name in.
So if you guys actually want to take a screenshot or take a photo, those are the Market Cypher A and Market Cypher B. Don't use those ones. Sorry, I should unmark those. Those are the ones, like I said, I've been trying to learn MACD just because I want to learn all areas. I don't use that at the moment because I'm not confident with it, but I want to learn it. The ones that I use are your Fu Manchu, your divergence indicator, and your Wolfpack ID. So those are the ones that I use. Wait, why does it not come up? Wolfpack ID. So those are the ones that I use. Even if you don't have the Pro, you can still have 3 indicators. Also, just so you know, with Market Cypher, with Fu Manchu Market Cypher, it has the RSI as well. So I should mention that. This blue line here is your RSI. Okay, so that's your RSI. Do I chart everything up? I chart everything up and I set alarms. I don't watch everything 24/7. Just because, like, I've got a business, I've got to try and run that. Shameless plug, if anyone wants hand sanitizer, I've got a hand sanitizer business and face masks.
Marketing 101.
I import them. I got a couple 100,000 if anyone wants some. But yeah, I chart everything up on my on TradingView and I just set alarms. And then I try to check it every 2 to 3 hours just to see what's happening. But generally speaking, I just chart everything up, I let it go, and I come back every 2 to 3 hours just to check on my phone. I also have TradingView on my phone as well. So if you connect TradingView to your computer with TradingView on your phone, then you can look at the charts that you've traded up on your computer on your phone. So you can see how it's all tracking. How long have I been using the indicators? I was using the indicators for about a month. I think I've been using this Market Cypher B, and I was hitting about 70%. And then I added the Wolfpack ID. And then when I added the Wolfpack ID, I've been pretty successful. Only because I was getting fake outs on this Market Cypher B. So it was telling me, okay, buy. So example right here is an example. You've got your anchor wave, you've got a trigger wave, and then it would say to buy, and then boomba, red. So by the time I looked at it, it would be like, okay, it's going down into the red, and then I wouldn't see that. I would actually buy here, and they'd be red. So I used to get fake outs all the time when I was using just Market Cypher B. When I changed it and I added the Wolfpack ID, that's when I got a lot more successful. Does anyone else have any questions or anything they want me to run through?
Nick, if you're going to go through anything else, I'm going to have to go. So you'll have to take over the screen recording.
That's all right, guys. Does anyone, it's been like an hour and a bit. Hey.
Time flies.
So does anyone got any questions? You can unmute yourselves if you have any questions and ask me quickly.
Hey, everyone's so quiet.
Yeah, everyone's real quiet. What happened to party night?
Guys, have a wine next time.
Yeah, next
Well,
time.
Hey, can you hear me all right?
Yeah.
Yeah.
Cool. With your take profits and stuff, like,
Yeah.
what do you normally do? What percentages do you normally do? Like, when you do your big box, like your long or short box, do you normally set about 50% take profit one at 50% or 25% or something like that? It's just because if you take profits too early, then like you're not left with much margin on the rest of your trade.
I set my take profit is purely set on where there's market structure. So say that I entered a trade here. You've got a bit of market structure around this point here, and you've got a bit of market structure around this point here. I usually don't like to, this is me personally. In a bullish market, I don't like to take profits anything less than 100%. That's just me personally. But it's been really choppy at the moment. So I usually take profits at the next point where it looks like there could be a bit of market structure, a bit of resistance. So right here is a little bit of resistance. So if I enter the trade at this point here, I would take my take profits one there, and I'll take another lot of profits at this point here as well. And then I'll let the trade run. But if, for example, I entered the trade, say, for example, there was a breakout and there was a reason for me to enter a trade here, I wouldn't exit till a bit higher up. So even if this is 17%, so times 20, that's it's like 200, what's that? Nearly 340%. So for me, there's no reason for me to take profits before then because there's no market structure. So I would actually let it run. That's what I do personally. I let them run until it hits a point of market structure. And then I'll take. If you want to, I usually tell people, especially when they're first starting, take profits a little bit earlier, especially in this choppy market. You want to be taking profits. It really depends on the market and what BTC is doing. Like if I was in any trades today, I'd be taking profits at between 50 and 100%. But 2 days ago when it was flying, I wasn't taking profits anywhere under 150% to 100% until I saw the market change. So it really depends on the market structure and what Bitcoin is doing. For anyone that's just starting, just remember, in the end of the day, you're better off taking profits and having coin in your pocket than you are risking it, because you don't want to get to it. You don't want to what happened this morning, and a lot of people were up 200, 300% on Ethereum and Ripple, and then suddenly Bitcoin shit the bed and they've lost it all. So you'd rather have at least some profit than no profit at all. So that's how I generally look at the market. I'll attack it with where's the nearest market structure, take my profits there and there, and then from there I'll either let it ride, or if the market's looking really choppy like it did today, I'll just exit the trade. So if it looks like Bitcoin's about to shit the bed, I'd exit my trades, take all my profits, and then wait for the market to sell again and then go again. Yeah, that's generally what I do. Any other questions? All right, guys. Well, I think that's about it for the night. I always post all my stuff anyway. Anyone can always message me anyway. Like if you have any questions, you want me to check charts, want me to check how you're trading, want me to see like if you're on the right track, just send me a Telegram. You can DM me. It's like I'm always reachable. Like I can always answer any questions. It doesn't really bother me. I actually like helping people. That's why I got in it. if one wins, we all win. So that's sort of what I'm here for, is to help you guys. So if any questions, anything, when we check your charts, when we check anything, just let me know and I'll help you out as much as I can. And thanks, guys. Thanks for being part of my first Zoom. So really appreciate it all. So yeah.
Well done, Nick. You did a great job, brother.
Thanks, mate. Thanks, boys. Thanks, guys. Thanks, girls. You all have a great night. I'll see you in the chats.
Bye, guys.
Cheers, Nick.
See you guys.